Good afternoon, Bob Dalton coming to you live from Allendale's trading floor here in McHenry, Illinois. It is Monday, July 26, 2010. We had a little selling off going on here today from the get-go in the grains here. We also saw lower prices here in the livestock. So let's just get right into the grains this morning. Corn finishing down 7 1/4. September contract at 364 even. Soybeans down 18 3/4 today at 998 1/4. Wheat down 6 3/4 today. This is September wheat. Chicago 589 1/2. Funds are long grains. Right now, several of their long positions are starting to take on some water here. We had a negative close on Friday in the corn. Technically speaking, we had another one here today. As a matter of fact, today new crop corn closed below the 378 1/2 support line we were looking at, and now we're looking for the downside objective of the head and shoulders top that was formed on that chart, coming down around 362. So that's our next downside objective with the close that we saw here today at 378. They settled at 378 even today with settlement. Right, soybeans, new crop beans today, traded below last week's low for a moment. That low was at 962 3/4 from last week. We got down to 961 here today. They did manage to close and settle up above at 960. I believe it was 66 is where we settled at in the November beans today. So we took a peek, went back up above that resistance and settled up there. And what's this telling us? Well, we are making some bars on the charts that are going to start to cause those that are bullish this market to reconsider their positions. Get your hedges done if you're a producer. If you haven't already and you're waiting for these new highs, these technicals here are telling us now that maybe what we saw last week was the high that the funds are willing to give us in these grains here this summer. Our harvest numbers, our harvest projections are out. Feel free to call in here and talk to a broker or check out our price projections on the website if you're a subscriber. All the new numbers are there, and we'd be more than happy to go over them with you. But my advice for producers who aren't doing anything or haven't done anything, start looking to lock in your basis on these grains. Start, if you haven't already, to get some of the cash sold, and definitely consider getting hedges done on those grains that you do not, or those bushels that you do not yet have hedged in the grains. Right. Back to the market activity today. Crude oil down only 6 cents. It's traded both sides of unchanged today. The housing numbers were a little better than expected when those came out. Crude rallied off of that. They pulled on back down. Then we saw the dollar break. The dollar right now is sitting down 41, almost 42 points on the day at 82.21 1/2. When the dollar started to break, the crude rallied again. They pulled that on back. So $80 has really been pretty good resistance for crude as of late, going into the storm this past weekend on Friday when we were finishing up here in the office. You're watching crude, run ahead of that storm. The storm comes through, doesn't turn out to be all that big of a deal as far as disrupting oil production in the Gulf is concerned, and we trade a little bit higher, a little bit lower here today. So crude's starting to come together. If we can get through that $80, that's of course going to be a good upside indicator for us. Allendale, we've kind of switched our opinion, and now we're trying to get long crude rather than short crude, which is something that Brian Splitt did go over in our research meeting today. Again, if you would like to see that meeting, give us a call here, 800-262-7538. Over to the livestock. Hogs today down $1.22 1/2 at 82 even in the August contract. Cattle we had at 92.65 August, down 77 1/2 today, and the feeders in August 114.95 is where they settled up, down 22 1/2 as well. If you're a cattle producer, a feedlot, what have you, we need to talk to you about what we're doing going forward with cattle. Rich Nelson is out of the office this week. However, Paul Georgie, who worked in the cattle industry for many years before getting involved with Allendale or creating Allendale, would be more than happy to reiterate some of Rich's hedge recommendations and trade strategies. Rich's information is also on the website and the subscription pages, and most all of us brokers know what Rich is professing as well for the cattle and hog markets. Feel free to call in if you'd like details. That's about all we have here today. Look for one of two things to happen tomorrow. I know they can either go up or go down, right? Well, you have people talking about, well, turnaround Tuesday is tomorrow. We didn't see it last week. I don't think we're going to see it again this week either. The technical damage is beginning to be done in the grain markets, and I would expect these prices to pull back unless the funds are going to come in and try to support their longs before they get out completely. So stay tuned. We'd be more than happy to provide you with information, provide you with some of the insight that we have in talking to our clients who are primarily farmers and livestock producers. Just call in with questions. 800-262-7538 is the number, or visit us on the website at www.allendale-inc.com. Thank you very much, and have a good trading week.